Sunday, June 11th, market analysis, Stan Ehrlich. I'm back from a week's R&R, and I find that we have some very, very interesting topping out type of activity last week. In the stock market indexes, a significant group, and I'll go into that in a minute. I always start out with the S&P 500. This is the daily vertical bar chart. A little review. Bear market of 22 bottomed out October 13th with a gigantic bullish engulfing buy signal. And that ended up being the head of a head and shoulder bottom formation that did not act quite normal. Nevertheless, after spending much too much time below the neckline, it recouped and has made new highs since the original breakout. In fact, new highs for around 10 months. Starting at the beginning of last week, we got overbought in a resistance area. Very important comment. Overbought, 1, a resistance area, 2, and banged right up against a historical resistance previous high. Very accurately. Let's call it a 432. I think the number is almost exactly. 431.99 comes to mind on, that's right, Friday high, which closed around where it opened, which is slightly higher on the day, but not above the previous highs of the week. So it broke out during the day and then just barely settled back to the surface of the previous tops or a hair under. Well, overbought again. Still having trouble at these resistance areas is a key phrase here that's going to apply to the DIA, the QQQ, and the Russell 2000 in a next couple of minutes. A common gap to close from last Thursday, a week ago, Thursday high, to the day before I left, Friday, the 2nd, I believe, of June, there was that gap, which shoved the market into new territory for quite a while in almost every case. But nevertheless, in that area of resistance where it is having trouble at the moment. So let's see. I expect to see an immediate downside correction this coming week to close the gap at a minimum. And you'll see the DIA, the Qs, and the 2000 gaps. They're all about the same situation. It's great. The combination at the moment is very idealistic for a retracement period to close some gaps. Now, there are other things at play. We could go further. There's nothing wrong with that. But there's lots of different support levels on these indexes at slightly lower levels where you would expect a bull market to bottom out at and start to turn back up again. Let's go look at the DIA. Now, all of a sudden, in the last couple of weeks, we went from the lowest lows for 2 or 3 months to almost new highs for, I think, 5-6 months, but not quite. It stopped right around previous high and closing prices in the last two months or so. Resistance. Plus, there's a bear trend line across recent highs that it stopped at. So, a close that was just barely at the previous rally high, which is the previous day, in a resistance area against bear trend lines, and also a gap to close. Slightly lower, not a lot. Would look like a normal retracement period, and lots of support levels below that. One other comment. Head and shoulder bottom formations typically do not form while there is a bull trend in progress. They usually are bottoms of bear markets, and that would be a year or two or more, and they reverse the trend for maybe a year or two, etc. Which we have. Last October 13th was the head of the formation in some indexes, like the QQQ in a moment. The DIA has apparently formed a head and shoulder bottom, and I talked about it the day May 25th. Listen to my commentary. I said, if this market stops here because of the price level it's at, and the timing looked pretty good too, and started to go up, you might have, and it just developed exactly into that, a possible last shoulder low. There's a gap to close several days ago. That's all three of the major indexes, in my opinion. And today, Friday's rally high was at resistance, previous tops of previous moves up on the DIA. So the trend line, the almost overbought condition also. Next, Qs. We actually did have a bearish engulfing ER sell signal on Wednesday, flat out. It didn't work the way it's supposed to, and it's not over yet, but we did hit the yellow protective stop, and that would be the worst case scenario. So this was a short-term small loss. Looks like 2 days worth. But the signals, the green buy signals and the red sell signals sometimes cluster. And we have a false buy signal here that worked for a day or so, and then finally October 13th, huge one. There are other examples. I'm not finding very many on the QQQ at the moment, but we're also up against this resistance area, which is the old 1 year ago gap closure above the market and is having trouble doing it. It's tried now the third time on Friday. Wednesday was the bearish engulfing sell signal, and last Monday was a rally high we don't seem to be able to get above on Wednesday or on Friday either. The close is a hair lower than where it opened, a little bit higher in the day, nothing to brag about. If we get below last Wednesday's low, you've got a minor downside breakout to do what? Oh my goodness gracious, a gap to close at lower levels. So that's all three of the majors. What about the 2000? And I normally don't talk about the 2000 very often, but there are situations, and here's one of them. Our rally high last Wednesday was against a major resistance area that proved to be the high of the week, and then slipped off a little bit on Friday by itself. So I'm looking at an overbought condition, barely, but there it is, against resistance, and a likelihood that it will pull back some. And guess what? There is a gap to close. Unbelievable. There's all four of the major indexes. This does not happen very often. Almost all same reasons to expect a downside retracement. Okay, gaps closed. There's, again, I comment, plenty of support, huge in this case. Below that, I do not expect any major sell signals. I do not expect anything but more than a major buying opportunity. I'm using the word major because the next time up, these indexes are going to blow through price levels that are new high ground for give or take a year. Major perpetuation of a longer-term bull market. And I think it's going to happen not too far off from now, and exactly after this upcoming gap, downside small dip correction to close some gaps. Futures contracts, here we go. I'll go quickly through the futures because I wanted to spend as much time as I could on the indexes. So the E-mini is just like the spider, etc. We have the bond market held at major support and oversold conditions a couple of weeks ago, tried to make a new low during last week, but didn't, rebounded very nicely on Thursday, and Friday held its own. I'm expecting to see the resistance level, which is fairly decent at 129.5, let's say, to be broken this time up and perpetuate a longer term bullish scenario. The bull trend line now has 4 tests. That's pretty good. So this bull trend line that we drew starting back in March or so, or maybe a little after, has passed the test. Important. The trend line may be broken and all of these lows in the same day because of some obviously bad news, but I don't think that's going to happen. Next is the 10-year notes. Essentially the same commentary, but we didn't get down to the support level. It just held a little bit higher. It looks like it could easily start to move back up again. It seems to be lagging behind a little bit more than the notes, bonds I meant. But I'm bullish on interest rate futures intermediate to long term. Short term, I think we may have started a nice little rally that could lead to a lot more. Next, crude oil in a support and resistance area. We bounced off support twice, that's 65. Third time a week and a half or so ago, sort of not that great a test of support, and banging against resistance hasn't proven to be fruitful on the bullish side either. So looking for new lows very soon. major downside breakout, long-term perpetuating itself. Continuation of the bear market period, which, by the way, we have a sell signal on the high day of a double top at the very beginning of this bear market. Next chart. Okay. Heating oil. Same kind of commentary. I've been saying this for weeks and weeks and weeks now. We're in a resistance area. We managed to push through it a little bit more, but another resistance seems to have stopped it in the last couple of weeks. I'm expecting new lows and a new low close below my 2.1431 line soon, and to be a huge, major, confirming long-term bear market breakout. Next chart. Natural gas kind of already has done that, but it's doing it very slowly. But it's already very, very, very cheap. It doesn't look like it's going to turn bullish anytime soon, but we may not have really big moves to the downside. It may just drift around sideways to maybe lower on the average. Next chart. Gold, we got the bottom again so far. Look at last week. We tested some support and turned right around and popped back into the trading range. So far, the low is a bullish green engulfing on the break. We also picked the low of a very big move that looks a lot like the one we're developing right now, by the way. We picked that low back on February 28th. And a sell signal during a bear move, and a sell signal on top, and a minor one, no big deal. So 3 of them in a row, that's clustering. Also 3 or 4 actually in a row here in about a month or less is clustering. And we oftentimes see one of the buy signals be the bottom of the break in both cases here. Next chart. Silver got the bottom again. I'm going to go through this one more time. This is really a great one. I talked you through day by day. Bearish engulfing, overbought condition, sell signal in the first rally high, which was on April 14th. Came down, hit a low, don't know why, some support, I guess. Bounced back up again, and holy moly, it tested almost exactly the previous rally high a few weeks earlier, and in an overbought condition, and had another bearish ER sell signal. That's a double top, it turns out. With both highs being ER bearish sell signals, you can't. Well, 2 days later, another bearish engulfing. I call it a complimentary one, just a nickname. And wham, it breaks out to the downside completely. This double top formation had a minimum downside objective measured by the depth of the formation, and it was down to 22.9. And it got there for a day and a half. And guess what? Had a bullish ER engulfing at the bottom so far. It's already worked very, very nicely. So now what? Higher highs over time, higher lows over time. Let's see what happens when it gets up to resistance at 25, which would be a classic spot for it to stop and turn down. I think it's going to do that without any problem at all. The test is closing above 26.5. That's a major bullish breakout if it can do it. Next chart is platinum. Oversold on the bottom. Too bad we didn't get a buy signal. Nope, we just didn't get one. Of course, we got one there on the bottom. We got one on top there. We got one awful close to the bottom there. And then these 3 highs there. Sideways, big sideways trading range. Major resistance has stopped it now 3 times total. So we'll see if it can get up there in the first place and then what happens next. So mildly friendly, as I am in all the precious metals. High-grade copper. Got oversold and is rallying about what I expected. So this is prime territory for it to stop rallying and turn right back down again on Friday's high, which did close lower than the previous day's close after making a new high. That's not really a good sign. And at a resistance spot. That could have been it on Friday. I think we're going to start to see copper head south, but no signal per se. Next. Into a resistance area for soybeans, almost overbought, not quite. Coming up too fast, too quick, in my opinion. I think it's about to turn back down again and test the area at 13 down to 1270. So I'm looking for a reversal back down on soybeans. Soybean oil, got to say the same thing. It's now officially overbought, coming up against resistance. Trend has been down since last November. Looking for a sell signal. Next. Trend is down on meal. Had a very feeble rally so far off of an oversold condition, and it just doesn't seem to want to bounce very much. This market looks very weak, and expect to see new lows real soon next week. Next, corn. Kind of the same thing across the grain belt, isn't it? Almost all of them. We got wheat to go. And looking for lower levels, could have rolled over. Next, wheat. Hey, what can I say? We're trying to pick bottoms. We got a couple 3-day rally out of that one. We got a 3 or 4-day rally out of this one. We got a great sell signal back there, but that just doesn't want to bottom out. Now that was profitable and that was profitable, but it's a downtrend. It's a bear market. We're not far from the lows. We're not even halfway in RSI, above 15 or less. This could make new lows real soon, real easily. Next chart. Live cattle, whopping big sell signal last week on Wednesday. Great sell signal. New low close the next day on Thursday. New low close on Friday. Tierra del Fuego. That's slang for heading south, South America, the southern tip of South America. Okay, so I think this is going to come back down to at least 165, 164 real soon. Next week. Next chart is live hogs rallying off of an oversold condition into resistance. I'm expecting to see new lows in the next couple of 3 weeks, maybe. Bear trend, bear market, looking for a sell signal. Next is OJ, got overbought, big retracement, back to support a second time, basically, and almost oversold, real super close. So I think we're probably going to turn back up again in OJ and see what we can do back up at that 292, 291 area. Next chart. Cocoa, getting overbought. Now 3 days in a row, 4 days in a row. I think it's going to turn down very soon. 86 is a pretty high RSI, so looking for a sell signal, a retracement, but it is a longer term bull market. Next, cotton. Well, up against resistance, sideways, a little boring lately since October. Long-term bear market, but just stalling out, looking for a test of the lows, and let's see if he can break them. Next, sugar the sweet has had a retracement and got oversold on the low day. So it popped back up again significantly on Thursday and dipped a little on Friday. Bull trend, to say the least, but could dribble on down and make slower lows here. I'm not very certain about this. I have to go with the flow. Trend is your friend. Looking for new highs, but it might have a little trouble and take a while to do it. Next. And this is the S&P 500. You guys have had a great weekend, I hope. Sorry, it's came home late last night. Thank you. Tomorrow.